here is the intraday level for SPY price action analysis. Bulls were just very, very strong. QQQ's tech tried to pull the market down, but they were just not able to push the markets down. And the reason why is because all of these sectors here are green. So you got all of these sectors that are green, with only XLK, the technology sector, being red, and with QQQ being very heavy tech dominated. This is why this sector was red for most of the day and really trying to anchor the markets and even pushing the markets lower. However, bulls remain very, very resilient, as we can see here on this bullish pennant breakout. And once we broke this particular resistance here, this is where we took a trade on the breakout and had some nice profits here towards this resistance level at 564. So just to summarize what's going on with the S&P 500, so far it looks like bulls remain in control, and they can get another green day tomorrow as well. Very, very strong day from the bulls. The market was led by, just as we anticipated in yesterday's price action video, the sectors that led the market were XLI, which is the industrials. We can see XLI was up 2.5%, with Caterpillar, which we discussed yesterday, up 5%. The market was also lifted by XLV, which is another one that we discussed yesterday, mentioning that there would be great rotation. And we can see the XLV healthcare sector made new highs at 149, new historic highs, and it looks like we're getting above the 70% melt-up operation, which means we should further anticipate the rotation will flow out of tech and into the XLV sector. So we also mentioned financials being an amazing trade. And if you look at some of these financial stocks here, Bank of America's up 5.5%. GS is up 2.5%. JPM is up almost 2%. So a lot of these banks have been leading the S&P 500 higher as well. If you are wondering why the S&P 500 is still grinding higher while tech is coming down, this is because rotation has been flowing out of tech in the last 4 days and into the other sectors. And I believe that this will continue to happen over the next 2 weeks, where we will see rotation flowing out of tech and into the other stocks, into the other sectors of the economy. So let's take a look at XLK here. XLK sector here is the only red. So very interesting that in yesterday's price action analysis, we mentioned that rotation would be flowing out of XLK. And heading into today's session, the only sector that's red is the XLK sector, which is the technology sector. So the stocks that are in this particular sector are Microsoft, NVIDIA, Apple, AVGO, AMD, ADB, CRM, QCOM, Oracle, AMAT, ACN. So a lot of these stocks you want to stay away from. Maybe not the small caps such as Cisco, Oracle. These may still get some upside, but the big magnificent 7 stocks like Apple, Microsoft, these stocks are very, very overbought, and I strongly believe that we will continue to see rotations flowing out of them. We shared Microsoft bear flag yesterday, and so far coming into today's session, even though the S&P 500 has been grinding higher, making new all-time highs, as we can see at 565.16, making new all-time highs, as shown on the 5-minute time frame as well. We got Microsoft on the left chart here breaking down from this potential bear flag, and it's looking like we are going to continue to see more downside, with volume also showing a lot of rotation, a lot of selling happening on the tech side of things. So let's go to NVIDIA as well. We also mentioned, we shared with our team why our team should stay away from NVIDIA. And if we look at the prior zone here, we had the same setup. We had this big supply bar right here, and after that big supply bar, we came back up, we retested the supply bar, absorbed the sellers, and there was just very strong overwhelming sell pressure, which led to more downside, as we can see here. Same thing, we got the big supply bar here, we sold off, retested that 117 support, 118 support, came back up, retested that level of resistance at 135, which is the 50% retracement of the big supply, candle, and so far we got a massive supply candle reaction to the downside, and that supply candle has been confirming with more sellers, as we can see here. So once we lose this level at the 20 EMA line around the 120 125 area, this can sell off all the way down to the most recent support, which is at 118. So I encourage our team to continue to stay away from Nvidia, Microsoft, Apple, pretty much all of the big tech stocks, and focus on the small caps as well as the mid caps. So some of those stocks that we mentioned in yesterday's price action analysis, such as from the healthcare sector, we can see UNH, part of the healthcare sector. This stock is up 6.5%. So it's very important that you learn how to follow the rotation of the market, how to follow the rotation of where the smart money is going, and there are plenty of ways you can find out the rotations and everything. So very beautiful move on UNH. Etsy as well. Etsy, we've been sharing Etsy. Etsy was actually on my Sunday weekly watch list, and that stock is up 6.5%. Absolutely amazing, and it just looks like bulls can continue to step in. EXP was another amazing breakout that we shared, and my God, this one's playing out the beautiful rally, base rally. We are finally breaking this 139 resistance. This looks like it is going to get more upside heading into tomorrow's trading session. We also shared banks, and banks are just doing phenomenal, you guys. Banks are doing really well. A lot of banks and a lot of small caps, as well as healthcare, are leading today's session, as we can see here from the S&P 500. So if you did follow where the rotation are going, you're doing really well today. Honest to God, I'm personally doing really well. I'm up 3,000 for the day, and the reason why is because I stayed away from where the market was seeing overwhelming selling, and I went with where the money was, which is the sector rotations from industrials, healthcare, financials, and so forth. So far, amazing day. There are several stocks that I'm watching. McDonald's here printed a massive bullish engulfing on the daily time frame, regaining the 20 EMA line. And so far, this is looking really great. This looks like we might get a big breakout move where we can head towards 263, and once we break 263, which is the potential accumulation zone, resistance of the accumulation, this can head back up really fast towards 276, which is my main price target. I'm watching McDonald's. I'm going to continue to watch McDonald's here for more upside. We also saw Jack. So if you notice, a lot of these restaurant stocks are starting to get big rotation moves. And this is because the small and the mid caps are getting a lot of rotation in the markets. And all of that happened when we had, so if I go back to QQQ here for reference, all of this rotation happened on the very same day where we got the PPI data. So once we got the PPI data on Friday, that came in lower, which is a positive for the market as well as for inflation. This led to a massive outflow of tech stocks heading into other sectors of the economy, as we are seeing now. So this massive bearish supply bar happened on the very day that we got the lower PPI data, which is good for inflation. And this is the reason why we have been seeing the rotation outflow. So far, this looks to me like a bear flag on the S&P, on QQQ. On QQQ's most dominated ETF or portfolio. And I strongly believe that once we break below 491.54, especially when we see any sort of market weakness in the upcoming days and weeks, this is going to be the leading sector or the leading portfolio that will lead the markets lower. So keep an eye out for QQQ. If you do notice any weakness in the markets, anticipate QQQ to be leading the downside. Now, we did say rotation was going to flow into IWM, which are the small caps, and this is IWM, absolutely massive. And team, if you go back to yesterday's video, I talked about something called what is known as a melt-up operation. And oh my goodness, I cannot emphasize on just how powerful this particular strategy is on the RSI. So here's how it works. you get a breakout, you're in an uptrending market, you get a breakout of a resistance line with the RSI reaching above 70%. Once the RSI pierces above 70% and you got the volume that is backing it up, this will signal what is known as a melt up operation, where we will see massive, massive, massive green candles to the upside with the RSI just piercing right through the skies above the 70%. And same thing we are seeing here. We also mentioned the same thing happening on the Dow Jones Industrials here. And we also shared the same example that we saw down here, where we saw these very, very small candles just at the 70% RSI. And these small candles signal to us that there are just lack of sellers, and that as soon as buyers will show up, rotation will continue to go towards the upside into these particular sectors that we are looking at. So that's why we're seeing this massive, massive green candle on the Dow Jones Industrials. And I'm very, very happy that we were able to capitalize on this beautiful move, because my goodness, we went from 401 to 409 in a single day. Absolutely amazing. I do want to show you some more stocks that I believe will continue to get more upside. Now, this beauty here, Lululemon is inside of this bullish ascending, this bullish falling wedge formation, and we have a bullish engulfing on the daily time frame. As I mentioned before, when we see this kind of behavior where the candles are getting very, very small at very oversold levels, what this signals is that there is an exhaustion on the sell side. So once we see that exhaustion, especially with this bullish falling wedge, this particular pattern starts off with lines that narrow until you get the candles that get very, very small between the range, and finally you get a massive squeeze breakout. So it's also important to note we have a beautiful bullish divergence here, where the RSI, the relative strength index, is rising, meaning buyers are showing up while price is going down. So for whatever reason price is going down, whether it be to long covering, whatever it may be, this is looking great. This is looking like we are going to get significant upside on Lululemon here. And I recommend that stock as a buy, either shares or long-term leaps for January 17. I strongly believe Lulu is going to see significant upside from here. Another stock that I have also been watching but has earnings soon is Visa. Visa, along with banks, has been doing really well here, getting a nice reversal. And once it breaks this particular resistance, it's going to retest the 289, which is $20 away from the current level. So I'm watching V as well here. There's another stock that's on my watch list, EL. Now for EL, although we don't have the green candle that we saw on Lululemon, what we are seeing is the exhausting candles, where the candles are getting very, very small, and they're just really exhausting, as we can see here, with the sellers really exhausting, and it's not selling off big to the downside. So being at these very oversold levels, there's a great chance as soon as a demand candle shows up, such as this one, this can trigger the move back up towards the 200 SMA line at 133, giving us a really nice 33% move. So I do have a long-term call on this. I have a January 17, 2025 130 call on L. This is a swing trade. It is a very far out of the money strike, but we are trading this like we would with a stock price. So looking really good there as well. DXCM, we have been mentioning this one as well. And finally, this also has been creating this bullish divergence as well. We got this demand candle, this engulfing candle, regaining the support level here at 113. Further establishing support, getting back up above the 20 EMA line, and I strongly believe this is going to get more upside in the upcoming days. DXCM. Waste management is also starting to break out. We saw a massive breakout at 213 yesterday, and coming into today's session we saw a massive follow through from 215 all the way to 220, up to 2.5%, and so far this looks like it can get more upside as well with volume increasing. So We sent out an announcement here, public service announcement to our wonderful team. Stock market is at very overbought levels and should start to see a pullback very soon. Please de-risk your short-term trades and be very careful staying on the sidelines for the next couple of weeks so we can catch the next bottom. Once IWM and DIA reverse back down, QQQ's tech stocks will lead the downside correction along with SPY. May not be today or tomorrow, but it is coming, so start de-risking and securing profits on positions. Give this a thumbs up if you understand the assignment. So as you can see here, I also sent out a reminder to our team to de-risk most of their positions and be ready for the potential pullback that we can see from the overall markets. And this is because, again, the markets are getting to very overbought levels. We could have another day or two, but heading into next week, it is important to note that a correction can be anticipated in the market, especially with QQQ continuing to show weakness. That concludes my analysis for today. I hope you have a wonderful, wonderful day. See you all in tomorrow's trading session.